Hi everybody, this is George Veter, August 4th, Veter Financial Group, sending out my monthly message. And I hope you're having a wonderful summer. We got a break from the heat in July, getting a little bit of it here in August to get things kicked off, but it's been, in my eyes, an exceptional season for us here in California especially. I know right now there's just so much going on in the news cycle. You know, we have of course, a lot of politics going on in the news cycle as it relates to economics. And, you know, this is a big year for interest rates. We're in the last year of Jerome Powell's service as the federal chairperson, or Federal Reserve chairperson. So a lot's going on. Of course, the Trump administration is fast moving. You can hate them or you can love them, but they certainly don't sit on their hands. And a lot's going on all the time to keep track of. So let me just give you kind of my view from my seat and why we should be very optimistic right now. First of all, we had three big clouds over the market entering the summer. We needed to get the budget passed, and we needed to get the tax laws made permanent, and we needed to get some big deals done for trade. Now, we've got all of those done. We have a lot more deals to do, but we've got some of the big five trading partners finally in the bag. We got Europe done ahead of schedule as far as what analysts thought was being done behind scenes, and we got Japan done. Those are big trading partners, and we've had a few summits with China, but we know that is in the works of at least some form of deals being orchestrated for the number two economy, China, and they realize they have the pressure on them to get a deal done because some of the competitive countries that do business with the United States have their deal done, which puts more pressure on countries that haven't got their trade deal established with the United States. Vietnam, for example, is a huge manufacturing hub now for the world. And until China gets a good agreement with the United States outside the exemptions that were made for China, Vietnam will take business from them. And other partners. You heard the Philippines, Indonesia, lots of these different manufacturing kind of sub-hubs. They've got their deal done with the United States, and so China feels vulnerable. That's why they're coming to the table and trying to get something done. That's my perspective, so I know that can be skewed one way or the other, but that's the way I see it. Also, as far as seasonality of the market, we have those three clouds that have dissipated or are dissipating, and we're getting into the seasonally best time for stocks. We know here in July, at the end of July, we had the Fed meeting and nothing happened with interest rates. We really weren't thinking, as far as the investment community, that anything would happen. I didn't know anybody that thought that the Fed would move in July. He telegraphs. Jerome Powell, again, you can like him or hate him, but he telegraphs what he's going to do way in advance. He's never caught us by surprise. So now the odds makers, which would be the analysts as well as the Fed governors, the consensus is September will be the first cut. Again, I don't know, and it's going to always have some dependency on data between now and then, but that's what Wall Street's pricing in, the bond market is pricing in. A September cut and then one more cut before the end of the year. So I think that's fair to use as an assumption until things were to change, if they do. So we have that to look forward to, and that will be a catalyst for the market. Everybody's holding their breath, wanting things to change. Now I'm watching small caps, for example, that have underperformed because they're more interest rate sensitive than large caps. Well, they're up way past the domestic averages today, and there's more interest there because of the assumption that interest rates will go down, financing will be more attractive, and small caps, again, theoretically use more financing than large caps to grow. So that's been kind of a smoldering burn that I think will take off, will rotate in the next few cycles of sectors. We've had the big upside surprise from foreign investments. A year ago, again, we wouldn't have bet that foreign stocks would outperform U.S. stocks. But the EFI index, which is Europe and Asia, is up right at 20% as of Friday's close. We're up about 15% on emerging markets. Again, that's a loose average, but we're right about there. That's for China, India, and company. If we were talking about this a year ago, we wouldn't have been making bets there, I don't think. People were worried that the potential trade deals not getting done would adversely affect those countries, and that's actually where investors have gone to look for the deals as the U.S. was sorting out what the flavor of the trade deals would be. So thank goodness we have 2 foreign sleeves in our models in some ratio. And then bonds have been an upside surprise. We're way ahead of where we typically are with bonds. In both our investment grade and our non-investment grade or corporate bonds, both of them are ahead of last year's pace. So bonds are doing good. Foreign stocks have been outstanding. Domestic stocks are taking off, especially values already had a great year, and now growth is really kicking in gears. This earnings season, we had Meta and Microsoft and some big players in large cap or mega cap growth that had phenomenal earnings announcements. That'll give fuel through the summer. We get the interest rate change in September next month. We get to October, third quarter earnings season, and then we get into the holiday season that the market loves. So I think we have a lot to look forward to. If you have too much cash laying around, get it invested. If you're caught too much in negative news cycles, read something positive, okay? The world has never been conquered by pessimists. I remind people of this all the time. There's no statue anywhere in any town square for the great pessimist in that community, only for the optimists. We have to think big. We have to look at why things will work. We have to be realistic, but not negative. And the news flow tends to be negative because that feeds people's, fear response, which is very powerful. And they just want you to buy their newsletters and watch their programs and buy their products, right? Or their ideas. So let's stay positive, stay hooked into us. I know I kind of rambled a bit, but I'm grateful to be representing you, grateful for my team. We'll continue to serve you in a way that shows you that we value our association, and we'll keep doing our job. Have a wonderful late summer, early fall. I'll talk to you next month.